These REITs offer a decent buying opportunity now. Value investors should consider these three REITs that have seen their shares fall over this past year. Apartment Income REIT. The Denver-based multifamily real estate company owns apartment throughout the U.S. Public storage. Throughout the U.S. and Western Europe, it's one of the largest owners of self-storage facilities looking to expand by acquiring a similar company. Piedmont Office Realty Trust. Primarily an office building REIT, Piedmont Office Realty Trust has struggled following the pandemic and the remote work movement. These undervalued real estate picks are best purchased this month. Let's dive in. Here are the three most undervalued REITs to buy now in July 2023. Welcome to Timely Investment Research. Real estate investment trusts offer a fairly straightforward and cost-effective way to gain exposure to real estate. Typically, two different types of publicly traded REITs exist. One is an equity REIT, which is a company that invests primarily in income-generating real estate. The other is a mortgage REIT, which will acquire mortgage-backed securities as well as provide mortgages and loans for real estate owners. Moreover, some companies may engage in a combination as a real estate investor and as a mortgage loan provider. Interestingly, REITs are required by law to pay 90% of their taxable income back to their shareholders in the form of dividends. This explains why many different REITs provide a much larger dividend yield compared to other publicly traded companies. Following are a few different REITs that have seen their share price fall over this past year. Consequently, they may offer investors an interesting buying opportunity in undervalued REITs. Number 1. Apartment Income REIT. Denver-based Apartment Income REIT is a self-administered REIT that focuses on acquisition, development, and management of multifamily real estate. Their portfolio encompasses over 23,000 apartment homes throughout the U.S. Over the past year, the company's share price has fallen by 15%, with a fairly low P/E ratio compared to its peers. The most recent May 1st earnings report stated a total revenue increase of 17%, but a net loss of $10 million in first quarter 2023. This stands in contrast to a net income of $401 million the prior year. Why? The company didn't sell any real estate in the most recent quarter. Apartment Income REIT announced for first quarter of 2023 a dividend of 45 cents per share. In January, the company announced the acquisition of a $298 million Southgate Towers, a luxury apartment complex in Miami Beach, Florida. Number 2. Public Storage. Public Storage owns and operates self-storage facilities throughout 40 states and 266 facilities located in Western Europe. Over the past year, the company has seen a drop in share price by 7%. Trading with a P/E ratio stands at approximately 12.51. In February of this year, Public Storage announced the proposal to acquire Life Storage in an all-stock transaction, which includes all Life Storage outstanding shares and units owned. Therefore, the Public Storage announced a 50% dividend payout to shareholders in February from $2 to $3 per share. Public Storage reported a 12% increase in total revenue for first quarter, as well as earnings of $2.65 per share. Also, they acquired 5 new storage facilities and were in the process of acquiring 12 other facilities as of early May. On August 3rd, Public Storage is expected to release its second quarter earnings results. Number 3. Piedmont Office Realty Trust. Piedmont Office Realty Trust is a self-managed real estate investment company that owns, operates, and manages high-end office properties within the U.S. Sunbelt markets. Their stock price has fallen by over 40% in the last year due to recent financial instability. Piedmont has a P/E ratio of 11.07. Alongside similar REITs, such as Boston Properties and Alexandria Real Estate Equities, Piedmont Office Realty Trust has had setbacks. Financial hardships following the pandemic and the ever-increasing remote work movement led to unpopulated office spaces. On May 1st, Piedmont Office Realty Trust announced first quarter earnings in which they stated a revenue increase of 5% and a net loss of $1 million compared to prior year. In first quarter, the company offered a dividend of 21 cents per share. The second quarter announcement is coming July 2. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.